Volkswagen scrambles to catch up to Tesla's focus on software. April 22, 2022. There's no question that even a legacy car manufacturer like Volkswagen has a lot of catching up to do if it hopes to model Tesla's hyperfocus on software. As one small solution, the German automaker is now offering a programming school to help train and hire software professionals in anticipation of a software-based automobile future. Volkswagen's Faculty 73 programming school offers training for people interested in learning software and someday working for the auto giant. As detailed in a report last month from D.W. René Corner, one such student, recounted to the publication how the program let him move back into the software world after being forced to drop out of school and get a job waiting tables to support a family member with unexpected medical needs. Corner finished the Faculty 73 program last March and gained a full-time offer from Volkswagen to do back-office IT work. Volkswagen's programs extend to budding IT professionals, software developers and other talents that will be needed as the industry moves to software and electric vehicles, like the ones Tesla has made standard. And with Volkswagen recently announcing plans to use Argo AI self-driving software. As reported by earlier this month by CarBuzz, the automaker's going to need all the software help it can get if it hopes to catch up with all that Tesla has done. Most companies' current standards for self-driving can be traced back to Tesla's business model and their move to create AI solutions for problems on the road. However, no other company is or has been testing autonomous driving or driver assistance systems to the extent that Tesla has. Autopilot was introduced in 2016, and the even more robust full self-driving beta was shared in 2020. And later expanded to a wider audience in 2021. Neither of Tesla's advanced driver assistance systems is perfect, but it's worth noting that they're being tested widely and regularly, especially when compared with those of other automakers such as Volkswagen. Source reposted and summarized from Zachary Visconti at Evanex. My take: good idea on Volkswagen's part. But even if Tesla stopped innovating, it would take 5-7 years for anyone to catch up to them. Fortunately, Tesla isn't going to stand still and wait. Tesla's market share keeps growing and growing. April 22, 2022. As in previous quarterly financial reports, Tesla has shared a graphic that illustrates its market share in 3 main automotive markets to highlight progress. The results are truly impressive. As according to the industry data, the company is consistently increasing its market share, despite the volatile global situation in terms of supply chains. In Q1 2022, the company sold over 310,000 electric cars, which is 68% more than a year ago. That's enough to exceed 2.5% market share in the US, Canada, and cross 1.5% market share in Europe and in China. In Europe, Tesla appears to already be closer to 1.8%, while in China it's 1.6% or so. With 2 new manufacturing plants, in Germany and in Texas, currently ramping up Tesla Model Y production, and strong demand above manufacturing capacity, Tesla has a big chance to capture an even larger part of the global automotive pie. It's difficult to forecast, but a market share of several percent within a year or two is definitely on the table. Tesla's long-term target is to increase electric car sales, on average, by 50% year-over-year. The short-term focus is to scale up production, especially in 2022. In the following years, Tesla would like to introduce new electric vehicles. That includes the Tesla Cybertruck, Tesla Semi, Tesla Roadster, and an autonomous robo-taxi. The growing Tesla share in the global car market, as well as a fast expansion of other new EV manufacturers, means also that someone is losing traction. The established manufacturers, at least some of them, which are not able to maintain their position for a variety of reasons. Source reposted and summarized from Mark Kane at Inside EVS. Tesla almost doubled the rate of Supercharger deployment in Q1 2022. April 22, 2022. Tesla continues its global expansion of the supercharging network, achieving strong growth of new installations compared to the previous year. During the first quarter of 2022, the company installed 248 new stations and 2,159 new individual connectors, which translates to an average ratio of connectors per station of 8.7. Compared to Q1 2021, the rate of new installations accelerated significantly, but compared to the previous 3 quarters, the volume is about the same, which isn't bad. considering the global supply chain issues. Quarterly results: 248 new stations, 84% more than a year ago. 2,159 new individual connectors stalls, 74% more than a year ago. 8.7 connectors stalls per station on average, down 5% year-over-year. Source reposted and summarized from Mark Kane at Inside EV. My take: the need to keep this pace for all the cars that they are selling and will be selling in the near future. Elon Musk formed X Holdings as part of bid to acquire Twitter. April 22, 2022. Elon Musk created a trio of holding companies dubbed X Holdings as part of his bid to acquire Twitter. This gives him the potential to bring all of his businesses under one parent company. As he mentioned earlier, according to the April 20, 2022 filing, new companies were created in Delaware, each with a variant of the name X Holdings. In particular, we are talking about X Holdings II, which is listed in the document as purchaser, and X Holdings I, which is named parent. Reference is made to a possible third-party tender offer by X Holdings II, a Delaware corporation, and a wholly owned subsidiary of X Holdings I, a Delaware corporation, to purchase all outstanding shares of common stock. Par value $0.000005 per share the common stock of Twitter, a Delaware corporation, together with the associated rights issued pursuant to the rights agreement, dated as of April 15, 2022, by and between the company and Computershare Trust Company, as rights agent, that are issued and outstanding, upon the terms and subject to the conditions set forth in the offer to purchase, related letter of transmittal, and other tender offer materials provided by or on behalf of parent and the purchaser to each holder of shares, together with the proposed second step Mayor Gurr contemplated thereby. Each term used and not otherwise defined herein shall have the meaning assigned to such term in the offer. This letter agreement was delivered by Elon Musk to parent and the purchaser in connection with the offer and the merger, according to documents filed with the U.S. Securities and Exchange Commission. Musk and his investor partners plan to put money into one of the organizations to fund the purchase of Twitter shares in a tender offer, while the subsidiary will merge with the social media firm. At this point, it is unclear if the holding companies will have anything to do with Musk's current companies Tesla, SpaceX, Boring Company and Neuralink. However, the topic of uniting all his companies under one umbrella has already been raised by him a few times in the past. Musk talked about creating a parent back in 2012, and in 2020 said that naming it X, which was suggested by one of Tesla's investors, was a good idea. Musk also owns the X.com domain. He owned it when it served as home to his financial services startup, which was eventually merged with another company called Confinity in a deal that would be rebranded as PayPal in 2001. Nevertheless, speaking at the TED 2022 conference, Musk said that it would be difficult to create a holding company that united all of his companies. This is due to the fact that Tesla is traded on the stock exchange, and the fact that the investor bases of Tesla, SpaceX, Boring and Neuralink are completely different. Source reposted and summarized from Eva Fox at Tasmanian. My take: I think you still might see X being the holding company for all of Elon's companies. If that is the case, then sign me up.